Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer. This presentation was given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial and please make sure you are aware of all your risks prior to placing any trades. Also note that the trades we're using in the presentation today are hypothetical computer simulated trades and their results. They're believed to be as accurately represented as possible, but keep in mind that live results can vary for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance and success coach with Locke in Your Success, LLC. And my team and myself help traders win in the market and in life as well. And today I'm here to guide you into the realm of high probability income trading. Now in a moment, we're going to be going over the winning trade, but before we do, let me quickly explain what we mean by an income or high probability trading strategy. An income strategy is where we put ourselves in a position to generate profits through the passage of time rather than depending solely on price movement to go in the right direction, meaning that we can often make money whether the price goes up, down, or sideways. Now this doesn't mean we're going to win all the time, but it does mean that the probabilities of us winning are much higher than they would normally be otherwise. Now when you find that you want more information as you're following along, simply contact us at lockeinyoursuccess.com or ask a question in the comments on this video, and we can direct you to where you can find more information. All right, let's move on. The winning trade we're looking at today is called the M3. The M3 is a high probability, market neutral, positive theta trading strategy, which essentially means that the trade tends to generate its profits over time rather than through the price movement in the market. And the strategy is quite good at doing so. So good, in fact, that it is unquestionably by far the most time-tested income strategy available from anywhere. The current M3 is essentially the same strategy that was developed by me personally in 2007, and this strategy has been live traded by hundreds and hundreds of traders over the last 12 years through all types of markets, and it's proven itself time and time again. I'm not talking about theories or form-fitted rules or creating your own lucky timing through backtests. I'm talking about real-time trading, my friends. So this strategy requires a minimum of $5,000 to trade. It has a 10% profit target and a 10% exit loss trigger. The position size we're going to be using today for our example is going to be $50,000. And on a position this size, that would make our 10% profit target and our 10% exit loss trigger $5,000. Now this strategy is one of our more advanced strategies, but if you've been following along with the past winning trade examples, you should be able to pick it up quite quickly. Now our position is entered 56 days to expiration, and the trade duration can be up to 56 days if we take it into expiration. So the example we're going to be doing today is for the January 2020 expiration cycle. If we take a look at our analytical software here, it is Friday, November 22nd, 2019. That is 56 days to expiration for our January trade. With the M3, what we do is we buy symmetrical butterflies with the short strikes approximately 20 points below the money. So you can see the asset price right now is at $15.90. So we're going to take a look at around $15.70 here, and we're going to put our short strikes there. And we're going to enter butterflies that have 50-point wings. Normally we do 10 butterflies, and normally when we do 10 butterflies at 56 days to expiration, we get a delta, which is this number down here, with the butterfly alone somewhere around minus 80 to minus 90. If that's the case, we can simply buy a call that's in the 80 to 90 delta range, and it'll end up with a delta, total delta, that is somewhere around zero, in this case minus 3.72. Now in certain environments, the delta of these 10 butterflies, sometimes it's a little more, sometimes it's a little less. So right now we have an implied volatility environment where our delta is a little less than normal. So in order to get the delta we wanted to buy a call somewhere in the 80 to 90 delta range, we ended up having to put in 12 butterflies. So we start out with 12 50-point wing butterflies, our short strikes at 15.70 and our long strikes at 16.20 and 15.20. And then we buy one call here to bring our delta down to near zero, in this case a 90 delta call. So if we take a look at this position, this is what we look like. We have our 50-point wing butterfly. You can see this in our expiration graph, which is the triangle shape. And then we can see our call over here. And our T plus 0 line, which is the dashed line, you can see that's nice and straight. So for those of you who may be new to an analytical graph, down the bottom is the asset price, and up and down the side is your profit and loss. The expiration graph in the light blue shows us the value of this position at any given price point at expiration. Our T plus 0 line gives us the projected value of this position as of today at any price point in the asset. All right, so this would be our starting position. Now from here, if we get 10 points below the short strikes, or our delta gets too high and we're near the short strikes, then we're generally going to take this and roll it back. In other words, sell the butterfly position. If we take a look at our analyzed graph, sell the butterfly position and move it a little bit to the left here. And if the market goes up too far and gets too far outside of what we call the tent, which is a triangle area, then what happens is we're going to take this butterfly and we're going to move it up. So we're going to take this off and move it over to the right. From time to time, you may see us also move the call around if it gets too deep into the money or too far, what we call out of the money. Then we're going to move that call, but for the most part, it usually stays about where it is. So this is how we started the January expiration cycle. There were no adjustments on this until 5 days later, which is relatively fast. Normally we sit in this position for a while, but what ended up happening here is we ended up getting a fairly aggressive up move in the market in the first 5 days of the trade, and we got more than 10 points past what we call our long strike here, which is at 1620. And when we do that, a lot of the time we're going to move the position. So if we look at this in our analyzed graph, you can see we started and the price level was back here, and it's gone all the way up into here, which is quite a quick and aggressive move in such a short time frame. So what we're going to do is we're going to remove these butterflies and we're going to reset it as if we entered the trade, basically. So we're going to take that off. You'll see, actually, I will show you. We would close this out. We're probably going to leave the call where it is, and we would, what we call, roll this up to here, and if we take a look at our analyzed graph, you can see that we're now back inside the tent area as we were when we started. This should look just like the starting position, right? So we just remove that and we go to starting position again. And this is what the position looks like after the actual adjustment right here. And we are good to go. So as of right now, we have the same setup. If we get outside the tent here too far, then we're going to be taking this and rolling it up again. If we get down below the short strikes and things become problematic to the downside, we'll be rolling it back. If our delta starts to change during the trade, because you'll see that, what's going to happen is this T plus 0 line, or the dash line, is going to do this. Let me draw it in. It's going to start doing something like this and start conforming to the triangle. As it does that, our delta number is going to increase, and we're going to do verticals to flatten that out. And you'll see that as the trade goes along. So it's November 27th. We stay in this trade till December 16th. So that's about almost 20 days where we do nothing. But the market is, well, it's continuing to rise a little bit here. We're still inside the tent, so to speak. Actually, we're not. We're at the edge of the tent here, but our delta is starting to get a little bit higher than we'd like it. In other words, this number here, we usually like to have it in this area somewhere around minus 50 or less. So what I'm going to do here is I'm going to remove two of these butterflies, and just removing two of them is going to drop it down some. And the reason I'm removing the butterflies first is because normally, or in the standard mode, we start with 10 butterflies. And That being the case, a lot of the times my first upside adjustment, if I need a delta adjustment, is going to be to take some of those butterflies off. So we're going to take those off, and then on top of that, we'd like to bring this down even a little bit more than minus 60. So I'm going to take 10 after this adjustment's done. We're going to take 10 or buy back 10 of these 1610s, and we're going to sell 10 1620s, and that's going to look like this. So this is going to be done in 2 orders, 10 and minus 10, and that's going to be our second adjustment. So we're going to do both of those. And let's make that happen. And that's going to give us a position that looks like this in our matrix and looks like this on our analytical graph. So we went from the position in blue to the position in red. All right, let's go to our next adjustment. It's December 16th. Let's go to 4 days later, December 20th. The Russell continues to go up. We're more than 10 points past our long strikes once again. So what we're going to do is we're going to do what's called a roll. Let's show you the position ahead of time here. That's what we look like now. We're going to sell this position and we're going to move it higher. We also moved the call this time. You see the call is way down here at 14.90. Our asset price is way up at 16.71. There's really no reason to have it that far away from the money. So this is one of the cases where we're going to just make the roll up. And there's no solid number here to do this other than we're just way in the money, and there's really no reason to be any further in the money than maybe 1560 or so. Let's see how where do we roll it up to. We end up rolling it up to 1520. We also rolled up the position itself. We're down. We're about break even, maybe down $100 at this point. So we haven't really been able to make much progress on profit and loss, and that tends to happen when the price moves a lot and you're zero delta. It's tough to gain money. These strategies do much better when the price settles in a little bit to a range, as you'll see as we move along. So anyway, this is our new position here. So we took the tent and we moved it up, and also moved a call. And it's December 20th. Let's see, our next adjustment is 6 days later. So we came here and we moved these 10 short strikes up 10 points by buying 10 here and selling 10 here. Just a simple vertical order, and that brings us down to a more reasonable delta number. And this is what our new position is going to look like. Okay, from here, what we're going to do is going to go to our next adjustment, January 8th. So we went from December 26th to January 8th. That's what, 5, and that's about 13 days. At this point, without the adjustment, this is the position that we were in. We had the call here at 1520. We have this broken wing condor going on, and the current profit and loss is 48.64. So over this short period of time, as you can see, the T plus 0 line is finally starting to conform to the tent, finally starting to build some profits. But what's happening is the delta once again is getting a little bit more steep than we'd like it. We're at minus 167. Again, we'd like it substantially lower than that. So we're going to do 5 verticals, 5 1670s to 1680. That, in this case, is going to bring us down to minus 92, which is within range for being in this position of the tent. And then if we go to the very next day, the market's relatively stable, doesn't move very much, and we get another nice pop in our profit and loss number, and the trade is up $5,534, which is in excess of our profit target. And if we look at our analyzed graph, this is what the position looks like immediately prior to closure. This is where I love to actually close positions when we're at the center or the peak of our T+0 line, and we had a nice value increase, and we're near profit target. Really nice time to exit out of this thing. And that is going to give us approximately $5,500 profit, which is about 11% on our planned capital of $50,000. Another really nice month for our trades. And that was the M3 trading strategy, this episode's winning trade. If you like what you see, I encourage you to join us and discover how you too can follow along with this and many other great strategies as they unfold during our weekly options trading for income webinars. And where you can also learn about upcoming winning trade presentations as well as our trading success blueprint. And perhaps best of all, you can get information about our free trading performance podcast where you can learn to become a much more effective trader, regardless of what type of trading you do. If you have any questions or comments or anything you'd like to see on the next winning trade, we'd love to hear from you. Simply comment on this video so that we can get those answered for you. And we would also encourage you to come on over to thewinningtrade.com where you can find past episodes of The Winning Trade, as well as a lot of other fantastic bonus information on how to profit through income trading. And please remember to subscribe and comment on our YouTube channel where I will personally answer any questions you may have. Thank you, and we'll see you on the next winning trade.